Yeah, I'm losing my
Let's talk
edge.
about trading here, Michael. How are futures made? On Friday, we like to kick back, relax, not do too much number crunching. It's not a great, 12:30 Central Time on Friday afternoon, Michael. Not typically when a lot of people are getting new positions on. So we're not trying to put a bunch of research in here. You and I are just going to kick back, relax, talk about something that is glossed over very often.
Mhm.
And it's how futures are constructed. And this goes a long way, I think, to helping people understand what they're actually trading. Because the first thing that most people trade, Michael, and you can maybe speak to this a little bit because although I'm new to the industry, I've only been trading futures for about 5 years. You're even newer. And most people think the first thing they think is, oh, it's in the future, it's an expiration. How do I trade it without owning it? And obligation to buy this thing, obligation to sell. It's all a bunch of stuff, crazy stuff like that. How do you like to think about how futures exist? Like where are you at right now, given all of the background, all of that crazy stuff that people get caught up in? I mean, there's textbooks this big
Oh yeah,
that's tackling the topic we're tackling here today.
I've read them, and in my journey as a trader, I guess, I started just trading like penny stock and weed stocks in high school, um, before weed was cool. No, I'm just kidding. But
Weed was cooler then. It's
cheap
not that
things
cool
we could
anymore.
trade, whatever we didn't have to put up a ton of capital for. And then I kind of learned more about ETFs and options, and I always really wanted to trade futures, but kind of what you talked about, the structure of a future is a little bit confusing. Unless you grew up in Chicago trading on the floor of the exchange, you don't really know what a future is. And the way I think about it now, you don't need to necessarily know all those contract details. What you need to know is
Sure.
that futures are a nice way to provide direct exposure to anything. I mean, you want to trade precious metals, boom, there's a futures contract for that. And it's not some exchange traded fund that is not even really gold exposure. I mean, you're just
Yeah,
getting pure play exposure with futures. And that's how I
and
view
before even getting to that pure exposure, which is a huge part of this, what you touched on there, Michael, is something that I want to go further into first, which is, you know, not needing to read a textbook on
it.
futures to understand this stuff. This is largely just a sector of trading that gets you that capital efficiency, gets you that pure exposure that we can hit on in a second here. But it's still something that moves up and down. I can buy or sell it the same as ETF shares or stock shares.
Mhm.
And it's really not that crazy past that. Usually when someone tells you, oh, don't worry about those details, don't worry about that, you're like, oh, like they're hiding side effects or anything like that. That's not really the case here. I really can't say enough about how simple futures are once you get past the fact that yes, they are futures on an index. And let's start here with the index because no future can exist, Michael, without an index that it trades on. And maybe you can speak to a little bit. We're looking at 75 colon SME, which is the small stock 75 index. And an index is just a measure of something. So what is this index here?
Okay, so the small stock 75, this index value is literally the summation of a few shares, their price, 75 of them, multiplied by their weights within the index.
Mhm.
All it is. It's a representation of 75 stock prices.
That's
And
it's too easy. And the index itself, Michael, is literally just a numerical representation of something. In this case, it's 75 stocks. The
mhm,
price right now at about $50 is, like you said, just like a little bit of stock A time plus a little bit of stock B plus a little bit of stock C and on down the line to stock 75
mhm.
there. But moving past that, which we're going to do in a second after the small stock 75 example, and hopefully what we're going to do as an exchange in the future, an index being a measure of something means that we could quite literally track anything. I mean, like what's like an interesting thing outside of most people when they hear index and trading, they immediately think S&P 500, NASDAQ, small stock 75. What's something that maybe isn't even trading yet that would be an interesting index before we even get to futures, just a measure of something? You got any ideas?
One of my favorites is the Big Mac Index, which is the price
Okay.
of a Big Mac meal at McDonald's in various countries around the world. And it's supposed to be an indication of the cost of living in that country. It's an economic index or indicator. But you're spot on. You can put an index on kind of whatever you like. How hot is it in Chicago?
Exactly. Like, I mean, like another example I always think of, and this is something that would be very relevant the last few months, but just like square foot of office space in New York City, like it could literally be anything. And this is part of it. What people get so tripped up on is how do I buy or sell something that I don't own or
Mm-hmm.
that I don't physically like? How could I sell a square foot of office space in New York when I don't own an office building in New York? And
Mm-hmm.
it's because what we're doing on the with the index calculation side and then the exchange side is creating an index that tracks that thing. And
Mm-hmm.
then, as we're going to get to in a second, creating a futures market that is the cost effective product that allows you to trade the index. And so, with your example, Michael, if you did the Big Mac index and you had Big Mac index China, Big Mac index US, Big Mac index Brazil, and they all had different prices, you could trade them off of each other. You
Sure.
could buy Chinese Big Mac meal, sell US Big Mac meal because you think that the Chinese value will come up to where the US, like it's crazy once you get past that whole thing, like I don't own it so I can't sell it, what are you talking about, this is too crazy.
Yep.
Honestly, the idea of the futures tracking an index that don't necessarily worry about the actual physical asset. All these futures at the small exchange are called cash settled, so you don't really have to worry about that physical asset. It's actually very freeing, right? Because these futures, all they do is they allow you to trade that index because you can't go to an index like your Big Mac index that you see on Wall Street Journal or wherever and just buy or sell it, right? You need the futures.
You need, yeah, some tradable product. And kind of what allows this futures contract to work is that once a month with small exchange futures, they settle to the index price. And that's what keeps everything in line so that these futures are representative of the underlying index. I would love to trade Big Mac futures. And kind of the great and cool value of an exchange is we could potentially make something like this.
That's the sickest part, right? Is like we are sitting here, we have meetings once or twice a week thinking about new products. And
You guys freeze?
China futures, uh, we we could absolutely do that. Are we frozen here or can you hear me?
I'm with you here, Frank. It stopped for a
All
second, but
right.
we're back at it.
Okay. But yeah, that is like it's freeing on our side, it's freeing on the trader side. It's just that futures are literally just the product, like Michael said it, that allow you to trade the index. This is the simplest view of this with a stock index here.
Mm-hmm.
And maybe drilling down into this simpler example, Michael, why would we make an index out of 75 components that spread across 5 sectors here? Why not just make a product that is okay? It's Amazon futures. It's cost-effective Amazon. It's French fry futures. It's a single commodity thing. What are the advantages here of making an index out of multiple components?
Sure. I think there are a few, and I'll just start with the primary one that you kind of learn about in undergrad finance if you've taken any courses there, but diversification. I think that's a huge benefit of taking several pieces. And in this case, the small stock 75 is comprised of five of the largest sectors. So now you have holistic exposure of the US stock market. You're not subject to as much firm specific risk. If you're trading Amazon on its own, you're really at the mercy of Jeff Bezos and their board of directors and how the economy impacts Amazon in particular. When you bundle all of these sectors together, which each have 15 subcomponents, you create more comprehensive exposure. So if one thing is up, maybe another thing is down. It's a little more even keel. But also with the structure of an index and then the futures on top of it, it's a little more cost effective too. I don't have to put up, what is Amazon, a few $1,000s a share now, or Tesla. You actually get a little piece of Amazon, a little piece of Tesla, a little piece of all those well-known names I want to trade, all tied together in a nice bow. I kind of think of it as like, I like food analogies.
Sure.
I love to eat. Like if I go out to eat, especially at a Chinese restaurant, it's often family style. Maybe I want to eat beef and broccoli, but I don't only want beef and broccoli. I also want fried rice and shrimp and all this stuff. So the index is really like combining all those things together, more holistic exposure.
Well, and you nailed something here that we prepped the show a little bit, and you didn't even bring this up. You kind of you brought this up without me even knowing. The idea of getting a little taste of everything and going further along with that food analogy. Yes, when I go to a nice Chinese restaurant, I don't just want beef and broccoli. But what I also don't want to do is make myself 500 pounds by getting beef and broccoli and this dish and the eggplant and everything else all for myself. I get a big plate of all of it. Like you're saying, I want, fifth of the beef and broccoli. I want a fifth of the eggplant. I want a fifth of it. And that's what this index is doing. That's what stock indexes do. That's why they are so important, both as measures. And it's interesting, going back to that index being a measure, people look at the S&P 500 just as a measure of sentiment in the stock market. If S&P 500 is up, people are feeling good about companies here in the US. If it's down, vice versa. But also from the investing side, it allows you to get, with the small stock 75 here, 75 stocks at an efficient rate because the futures are cost efficient. But then also I get like a little taste of Amazon. I get a little taste of this and that without having to diversify on my own, buying a whole share of Amazon, buying a whole share of Apple, especially as those things get more and more expensive. And what it does, the first piece that you spoke to, is it blunts a little bit of the volatility of those single stocks, right? If I had bought United Airlines, I saw at one point a 70% decline, and that pulled on this yellow line here, the small stock 75, for sure. On the flip side, if I sold Tesla, the thing ripped up to 100%, came all the way back to unchanged, 100% again, then went to 250% on the year. That's very volatile, whether you're long or short. Of course, everyone would love to be long Tesla right now, but seeing your P&L swing by 10, 20% on a daily basis is, while it's maybe thrilling, in the long term, it's not very sustainable. And that's why when you put Tesla and United Airlines and Apple and Amazon and Microsoft and all these things into a 75 stock index, you've got the movement. I mean, this yellow line looks like it's flat almost, but it was down 40%, got all the way back to positive on the year, fell again, and then now is back to unchanged. It blunts these single stock moves while still giving you opportunity.
Yeah, you make a great point there. And something else I just want to touch on is Tesla has performed amazingly, since April here. But who knew it was going to perform amazingly? Nobody knew. So even you could have ended up with United Airlines if you were just
Sure.
throwing darts against the wall. But another piece I want to touch on too is, when you talk about like passive investing, right? Constructing a portfolio. I think an index future is a great way to do that because of the capital efficiency, because of the multiple constituents within, but also the opportunity for active traders in an index-based product. Indexes aren't only for just buy SPY and let it sit. They're not only for passive investors. Maybe that's kind of where the idea started with mutual funds and then ETFs, but there's so much more in each of these movements in the yellow line. So not only do you get holistic equity exposure, you also have really cool opportunity. It's tough to trade Tesla that's rallying into 250%. You want a little bit of that back and forth movement that you'll get with an index like the small stock 75.
Yeah, and packaging them together you still have a stake in the Tesla game, but like you said, I'm sure were plenty of people last year who would feel more comfortable buying a United Airlines as the CEO of Tesla is getting stoned in interviews and
Yep.
talking about how he's going to sell the company at $420 a share. Like, I'm not trying to crap on Tesla because the company's done very well this year, but you don't know, like, and so placing a long or short bet on a stock market diversifies that, reduces these huge volatile swings that you see in both of these companies, that, any given day, you have no clue what the next day or week is going to bring. So a lot of opportunity there, and much smaller volatility. And then also there is room to get outside of stocks, Michael. And here we're looking at small precious metals / SPRE, which has been hugely popular lately as metals are moving a ton. But Michael, maybe you can speak a little bit to why we would make an index out of non-stock components, and why not just say, okay, well, there are metals stocks, so why do we need to get away from stocks? It's definitely on our side, constructing products, a hell of a lot harder to construct things out of non-stock components. But why would we go through the tougher path here?
Sure. It's a little tougher, but if this was easy, everyone would do it. So Donnie,
I hear that every day.
but one thing I was always frustrated with in college is reading the Wall Street Journal and hearing about gold and silver and platinum and interest rates and oil, but not being able to act on my ideas. And you can probably construct a portfolio of 10 companies in the gold mining space, or maybe there are 100
I'll
in the
do it for you right here. Here's a visual for you.
But look at that. It's so disappointing. I mean, let's say we were investors who wanted exposure to gold. And we went to our advisor and said, I want to trade gold. I'm a little uncertain about the economy going forward. I like this safe haven asset. Put me in gold. And you get put into GDX and I get put into XME. And then we meet up at a barbecue, a virtual barbecue, and you're like, wow, that gold investment is doing so well. And I would just be sitting, are you serious? I'm down 20% on the year. So even though all these ETFs exist, a lot of them are exposed to extraneous factors not even related remotely to the price of gold, like corporate actions and boards of directors and environmental concerns, et cetera. So I think an index that's actually, this goes kind of back to our initial points at the beginning of the show, Frank, futures are direct exposure. And small futures are no different, whether they're an index or something like the yield product, which is a little more precise.
Absolutely agree with you there, Michael. And it is the analogy I always draw, and that's been very relevant the last couple of years here, is marijuana and the performance of marijuana stocks relative to the commodity itself. I've sat there with many friends and family friends who show me their Schwab account or whatever account that they have where they're passively buying marijuana stocks, and they're like, why are these underperforming? And it's like, well, because that's a company where it could be some dingus running it and their operations department isn't coming through, or whatever happens to that company that doesn't necessarily happen to that commodity. And yeah, like you said, if I at January 1 wanted to invest in gold and someone put me in GDX or someone put me in XME, this isn't a couple percentage points. Choosing these stocks, first of all, divergences relative to the actual commodities, and huge divergences between the stocks that you picked themselves. So that's why we go that extra mile to create the thing out of the actual commodities themselves.